It's been a week of clashes, closures and profit cuts. Anglo American Platinum closed all its operations on Tuesday after workers stayed away following riots on Monday. The world's largest bullion producer, Anglo Gold Ashanti, announced a plunge in fourth quarter earnings. And the head of global mining company BHP Billiton stepped down after a 43% slump in first half profits. EcoBank natural resources specialist Rolake Akinkugbe joins me now. Well, there's a load of new people in charge, really. It's as if the old guard's gone. Things look very different in the mining industry, don't they? A new time, perhaps, of austerity, do you think?
Perhaps of austerity, and it's quite interesting because the new guys coming in a time of great economic difficulty. When you look at the financial sector, for instance, banks are increasingly reluctant to lend money for large-scale mining projects and resource projects globally. So these guys are going to need to find alternative sources of funding. And
very interesting indeed. So what are they going to do?
Well, one of the things they have to start to do is to be a bit more accountable to shareholders. We saw a lot of the acquisition bids fall through over the last few years, something which may actually have accounted for the departure of some of the guys at the helm of these organizations. So it's going to be all about belt tightening and cost cutting in the industry.
Well, exactly. I mean, you got the impression that some of these acquisitions that the old guard made just didn't work out.
No, not necessarily. And one of the reasons they didn't work out is because if you look at global commodity price cycles, they probably misread it, and they were probably overly optimistic about how the commodities demand was going to be sustained over the long haul. And we saw a couple of days ago with the US Fed and China signaling lower than expected demand for some of the key global commodities such as iron ore and crude oil.
What about, let's talk about China if we may. I mean, is that going to be a big pull on demand, do you think, in the years to come? Or is it cyclical, as you suggest?
It's cyclical, but China is increasingly an important driver of global consumption of most commodities, whether you're looking at hydrocarbons or whether you're looking at precious metals or base metals. So I think what happens in China, and including more recently in the real estate sector in China, where demand for steel is a key driver, I think China is going to be an important factor in that global commodity cycle.
Mining stocks, of course, take up a lot of the global stock markets in major terms, London, Africa and so on. Do you think that they are a good investment now, or would you advise people to wait until you see how the new guard actually makes them profitable again?
Well, if I really knew the answer to that, I'd be a millionaire. But it depends on what type of investor you are. Sure. Are you an investor who's just interested in speculating in stocks, or are you looking at putting boots on the ground in countries like South Africa? If you are, you have to consider labour issues, you have to consider exporting and transporting your minerals outside of the country, so infrastructure spending is going to be a big issue. The question is the real balance between risk and reward, and what we'll actually see in the months ahead is a lot of companies like Anglo Gold Ashanti and Goldfields of South Africa spinning off different parts of their asset portfolio in order to reduce the shareholders' exposure to risk in those markets.
This is a story we'll be covering for a very long time. Rolake, thanks very much indeed for joining us.